Is it a good time to begin buying cryptocurrencies? Well, in this video, we're all going to find out, but most importantly, I'm going to give you some tools that you can apply to any project you like that will tell you when a good time to accumulate the token is. Now, there's three different things we have to look at when we're investing in cryptocurrencies or pretty much anything. There's three lenses. The first is the macro market. What's the current economic situation in the world? The second is more crypto focused or market focused. What's the macro crypto market doing? And the third, of course, is looking per project, because per projects, they do swap and change depending on, independent news, of course. So we're all going to tie this in. It's going to make a lot of sense in this video, and it's going to give you clear, concise answers. But the first thing we need to look at is this. Where are we headed? This is going to make sense in a second because, well, pretty much for us to know when to accumulate, we have to know the potential rewards we're getting by buying at this price. It definitely makes psychological sense, because if you buy it in $1 instead of 50 cents, you might go, okay, well, I'm losing half of my potential rewards for where it's probably going to go to. So it'll definitely make sense. So back in 2013 at its all-time high, the market cap was $15.9 billion. That doesn't sound like much nowadays, but it definitely was back then. Fast forwarding to 2018, right? The global market cap hit a tipping point of $830.4 billion. Therefore, 52.2xing from 2013. Pretty impressive. That's insane numbers. However, if we fast forward from point A to point B, the recent all-time high hit a massive, almost $3 trillion market cap, but it was about a 3.6x from 2018. So not as much, diminished quite a lot, right? So on this trajectory, it doesn't sound like moving forward, it's going to be that prosperous. Well, I definitely think it'll be more prosperous than most people tend to believe because of these two factors: institutions and nations beginning to adopt a lot of the technology, okay? Which is why I think we'll push to about a $10 trillion market cap in the next bull market. Now, the general consensus is between 5 to 10 trillion. Where it goes, no one really knows, but definitely we'll see some more demand for what we've seen before, because we've got bigger players, bigger fish in the pot, okay? It's just as simple as that. So I definitely think this will be a tipping point. There'll be regulation and hopefully involved between now and then, but I definitely think it's a stepping stone for 2029 plus, where we will actually begin to see crypto adopted for its intended purposes, okay? So that's all good, and we're going to touch on this in a minute, because market dominance is very important when finding strategic levels for our projects. But when do we begin accumulating on the crypto lens? Well, let's find out, right? So essentially, I found these two levels, right? Resistance and support levels. Now, the resistance level of, now I'm going to call it resistance. It's pretty much just like the tipping point to where I don't want to invest anything over, okay, or dollar cost average into any of my projects over the $1.25 trillion level, simply because, well, look at the price action we've recently seen, right? It's been pretty much lower than that, okay? So typically, when the prices does come up, especially steeply, the market follows, and every token is pretty much worth 10, 20, 30% more than what it was, a few days before. So the bottom point that I'm kind of hoping the market goes down to, and where I will actually begin to inject more money, is $750 billion. Of course, anything south of the red line is obviously a good thing, okay? The current market cap is about $1.2 trillion, which is a good thing because it's beneath the line. And don't let this chart confuse you. This chart's about a couple of weeks old, so we're actually about at the blue line right now. But this means nothing, right? So technically speaking, yes, now's a good time to buy. But, or dollar cost average, it really isn't, because we have to look at individual projects, again, because that will really be the decisive factor. If all your projects are up 100, 200% recently, why the hell would you want to buy at an inflated price? That's how you get stuck holding your bags. But, we've kind of been looking towards crypto mainly, and we'll look at, projects individually in a second. It's very important, again, I want to take you guys back out and just remind you, look, this all does depend on the macroeconomic situation. If a new war breaks, if something important happens, there's different cycles right now. You got the housing cycle, your stock cycle, so on and so forth, that can literally play a huge difference in crypto. Okay, so you want to look wide, then you want to come in. And I think people get confused with that factor, right? So anything can happen, and that's why I have 5 to 10% of my cash holdings always ready, always liquid cash, stable coins. I can inject in the market for what's called a black swan event, or a sudden market correction crash, where a lot of the whales tend to buy in, right? We saw the same thing with COVID-19. There was a massive crash suddenly, and then within a day or so, it just corrected suddenly because the whales have the money to instantly buy in, okay? So I'm ready for that. That is where you really make life-changing wealth. Now, will it come in the next 12 months? Maybe. Will it come in the next 36 months? Probably more likely, okay? But I'm happy to hold my cash past the 2025 bull market, simply because the prices I will get cheap from that event happening will probably outclass, will definitely outclass rather, the gains I would make from investing now in 2025. And look, you might be saying to yourself, well, why not get the best of both worlds? Invest now, sell 2025, and when that happens. No one's perfect. We can all say buy at the bottom, sell at the top. It never happens, okay? So I'm definitely not taking my chances on that. Now, hopefully you understand, very important to go wide, right? But let's look at the project level now, because this is probably the most important level, because no matter what happens, projects always do different things. So there's 4 rules I've got that you can apply to any project. You only have to do once, okay? And that's these. So we'll go through them in a second. I'm gonna give you an example on one project in just a minute, right? So the first thing is year-to-date difference. Particularly, Bitcoin had its all-time low in pretty much actually good timing, the start of the year. So we pretty much hit year-to-date on CoinMarketCap, and we find the price of the token or the project at that point and compare it to now, okay? It's very important we do that. Also, the vesting in emissions up until December of 25, because we do not want to invest in a project that will dilute, say, 50% from now until then, because in that case, we need to move our price buy levels down. Otherwise, we're buying at inflated prices, even if our expected ROI is a lot, okay? So that's something we have to take into consideration. Number 3 is the market dominance, right? From its previous all-time high and also future market cap. So what this pretty much essentially means, right, is, and the reason why we're looking at the macro market before in terms of dominance, is when you're looking at projects, right, they typically have a market percent dominance or share, okay, which pretty much means their market cap compared to the global market cap. And if, whatever percentage that is, if it's held that over the last bull market, or even better, bull markets, we can confidently assume that it's going to be roughly the same market dominance in the next bull market, all things considered, okay? So what that means is we can then take the $10 trillion total market cap and divide it, or times it by the percentage of that market share, giving us a rough market cap, okay? Now, of course, this is so many variables to play here, but the 4th step is actually in a combination with that, right? It's in finding important upgrades that might push that dominance up, right? Suddenly. Now, I'm going to give you an example of Near Protocol in a second, but we essentially need to look at 24 and 25, particularly late 24, early 25, or mid 25, to kind of to hope for that increase in market share or dominance, all right? Which pretty much can be from very important upgrades. Average upgrades aren't that important. We have to look for the cream of the crop, and that's like Near Protocol, for example. I recently reviewed them again, and Near's a very interesting project because they're coming out with pretty much their main important upgrade that, besides mainnet, is like the next best thing in, coincidentally, late 24, early 25, which will allow the project to hopefully shoot up 10, 20, 30% more than its typical market dominance percentage. So it's very important we analyze these sort of things. So with that said, the project I'm going to give you an example for today is Hedera. We've got some great content coming up, guys, and let's just dig straight in. Okay, there's a lot to cover, so I'll try to do this as fast and concisely as possible. So what you want to do first, of course, is just get an idea of where we're currently sitting on the project, okay? So as I said to you before, I mean, the early start of the year to date, actually was when Bitcoin was at its lowest price it was in a few years. So it's a very good indication for us to just have a quick peek, right? So as we can see, Hedera is more or less just under a 2x up from that point in time, which is actually okay. If it was 500 or 600 or 700% up, that's like, okay, maybe we should just hold off a little bit more for this project to fall off. But Hedera actually is within reason, because if we hit all, I mean, even back in 2020 when the project was pretty much well unknown, right? The point it hit at the start of the year was pretty much on par, if not better, than most of 2020. So yes, this is also a good indication. No, it's not ideal, but we'll talk more about this later on, okay? So let's touch now on the inflation or the emissions. Now, Hedera doesn't really have a predicted emissions schedule or vesting schedule because it is a business and the way it's structured doesn't really approve of that. However, what I've done is just use historic information and found out that it's pretty much an average of 10% year-on-year inflation, okay? So essentially what this pretty much means is if everything were to stay the same right now, in 2025, approximately 2 years from now, we should pretty much see a dilution of 20%, which works out to be in numbers a 0.125 cent dilution from today's price. Again, if everything were to stay the same. So we'll touch on why that's important in a minute, because that will actually be an indicator as to how far down we need to pull our expected dollar cost average max limit, okay? Now, the dominance is important, as we know, because essentially this is what we can use to predict what it will roughly be in the future. Now, Hedera has a very interesting chart because typically price and dominance follow. Now, Hedera's doesn't. As you can see, there's quite a large gap here. Now, the dominance is in purple and the price is in red. And as we can see, Hedera has these spikes and this slow trail off. Spike, trail, spike, trail, spike, bit of a trail, right? But what this shows is that, as you can see, the dominance here, back at the start of the last bull market in 2021, the dominance was about 0.025%. Now, at the top of the bull market, it actually peaked to about 0.25%. Okay, so it 10x'd. Now, if you take this into consideration, this kind of tells me we should hopefully see a 2% dominance on Hedera in 2025 at best, maybe even more, okay? And again, this would mean the market cap would pretty much follow from the estimated probably max $10 trillion market cap, okay? We're talking big numbers here. But I'm also going to compare this with the kind of tip-off point from the previous all-time high, which was again about 0.25% as well. So we'll use both indicators to kind of figure out a rough token price in future. But of course, this also can be elevated by what events are happening around that time as well. So there are some very important things happening in the recent times. In Q2 of this year, we'll see the community nodes being activated, and in Q3 of this year, they will also be furthered, okay? They'll be further decentralized. This just means the network will become more permissionless over time, and pretty much means there'll be more staking, okay? More demand for the token. Now, in 2025, from what I think, will shard the network. They've obviously mentioned it. Lehman, the founder of Hedera, has mentioned that they do want or plan to shard the hash graph itself, which is very, very big, pretty much means infinite scalability. But more importantly, there should be permissionless access on the network as well, meaning anyone can become a node, or at least around the time of 2024, 25, maybe even 26, okay? That is huge news. And as we saw with the dominance, I mean, that in combination with the usual increase in dominance, which is amazing for Hedera, it might even spike above the 2, maybe even 3% dominance mark. So what does this look like? Well, if we begin to pair everything together, right? Again, the 2x demand from year to date has got a good indication that, okay, we are in buying levels. The 20% year-on-year inflation pretty much just shows us, okay, well, we pretty much need to take whatever this value here is from the current price, and we need to pretty much buy in from that at minimum, okay? Now, again, the market dominance, again, minimum, at least if it matched the last bull markets, is about 0.25%, which would put the market cap at about $25 billion, aka putting the price at about 69 cents per token. On the flip side of things, the max, if it goes to the 10x that I predict, it'll be about a $200 billion market cap, which is huge. The price being $5.40. Again, this obviously accounts for inflation, right? So if you match all this with the potential for the network to be sharded, also the permissionless access, aka more token demand, rating it 10 out of 10. That's if it plays out, right? So that would create so much more demand for the token. So ultimately, what does this all mean? Well, essentially, this has given us price, a minimum and a maximum price for 2025, okay? Around a $1 to $5 HBAR token, aka if we use this dilution price, take it from the current price and go to a nice round figure, I'm putting it at 0.05 cents as to my beginning dollar cost average price, okay? So that would put the multipliers at a 20 to 100x from this price, okay? So this is a good level for me. But if you're someone that's like, no, I'm investing in Hedera, I want a minimum of 40x. Well, it's simple, right? You just simply take this marker and then you pull it down to a price that reflects the minimum you're willing to, multipliers you're wanting to get, okay? So this might be whatever that works out to be, right? So 0.03 cent Hedera token, which actually isn't that unreasonable considering way back in 2025, I mean, this was kind of like, it definitely went below that, okay? So look, it's going to be a lot harder for it to drop to that low, but you definitely need to figure out where you want to kind of find your buy level, okay, based on where your predicted price will be based on these factors. Again, there's a plethora of other factors involved in a cryptocurrency, but this is what I've kind of concluded as the easiest. Anyone can go ahead and do this right now in any of their projects, okay? So again, you find a price based on this information and you pretty much pull down the beginning of your dollar cost average to whatever level you want to hit a minimum multiplier. But ultimately, hopefully this has helped you. It's supposed to be a very, very quick way. You can just simply find token price. If you want to know more about how I kind of come up with my figures, then please let me know down below and I can make further videos digging more into this sort of stuff. All right, guys, thanks so much. Talk to you soon.